Financing that dream home might seem difficult, but don't worry. If you have any query related to home finance, whether it's about interest rates, repayment strategies, or even how you can avail tax deductions on them, then you've tuned in to the right show. Very, very warm welcome to Magicbricks Now. This is Property Hotline, the show that answers all your real estate questions. I'm Kavita Krishnan. Our guest for the day is Kartik Jhaveri. Kartik is the founder and director of Transcend Consulting India Private Limited. He's going to answer all the questions that you have about home finance. Kartik, let's get started with a website query that's come in. Now, Shanmugam says that he has taken a home loan from a reputed banker. He took the loan at a floating rate of 10.45%. It has come down to about 10.2% now, which obviously is much, much higher than the current rates, which we know are trending around 9.5% odd. He says that his interest rate obviously is not coming down, and now he wants to know if there's any provision to bring down these interest rates. There is.
Well, I mean, there is. The answer is both yes and no. Obviously, he's taken his loan much before this MCLR regime was put into place. So, obviously, he's got a certain formula, a certain equation which he has agreed with the bank, and therefore, the rate is moving from 10.45 to 10.2 at the moment, which is the case. Now, however, having said that, what's the maximum it can go down to? Yeah, well, you can request the bank. You can also tell the bank that, look, I'm going to get it refinanced because, you know, that's one short way of actually getting the best rate possible on your particular loan. But I don't think it can go too much down. You may have to pay a little bit of a fee and then it can go down. That's your other option. And the third option obviously is, like you rightly said, loans these days are in the range of 9.4, 9.5. So which means if you want, you may also want to consider refinance, because if you are very early into the loan, which is to say that if you're in the first 2 or 3 years of your loan, even an interest rate differential of almost like 0.8% or to 1% can actually make a significant impact on the amount of interest that you will save over the next so many years. But that's also dependent on exactly where you are in this loan. So if you're early in the day, then by all means, even that's your last resort.
Early is how early? The first 10 years of the loan?
No, 10 years is too much. I would think the first 2 or 3 years or 4 years, if you're somewhere there, which means to say that if you've got another 10 or 15 years behind that to pay, if it's a 20-year tenure, that means you've got lots of time to pay. So there is this definite case of moving your loan and getting it refinanced by another bank or a NBFC.
Right, and also what you need to remember is that in the first few years of the loan, like he just pointed out, the thing is that you are paying more of interest over there on your EMI. The interest component on your EMI is much, much higher than the principal component, and that is also the reason why you need to be very, very careful about the interest rates in the first few years of your home loan. Very quickly, before we move on to the next question, the MCLR, I do recall that when RBI had come up with the MCLR formula and banks started using it, there was this talk that if you are a customer, existing customer who has a home loan, then you need to actually go to the bank, talk to them and tell them that you want to shift to the MCLR. So that's an initiative the borrower has to take, right? So what does that really entail? Just speaking to them, or is there a fee that I need to pay to move from base rate to MCLR?
In all likelihood, yes, there will be a certain fee that the bank will levy, which could range anywhere from maybe 0.1 or 0.2% to as much as maybe 1% also of your outstanding principal. Because you see, what is happening is, and there is a logic to this. So if you've been given funds, the bank has correspondingly borrowed those funds at a certain cost and given it to you. And that's why you see that differential spread. So maybe they are earning 8% and they've got it at 8% and they've given it to you at 10% or 10.5%, whatever the case might be. So their spread gets affected, so which is why you have to pay them some amount of money to shift your loan into another tranche. So that's one thing you will definitely have to look forward to and expect. And
so you can expect to make some kind of payment to the bank.
Absolutely.
However, Kartik, going by the RBI governor's comments during the policy, he did indicate that he is not very happy with the way banks have actually passed on the reduction in interest rates to customers, and he's actually pulled them up for that. Another thing that he also very clearly said is that RBI itself is reviewing the MCLR formula again, and he did hold out the hope of cheaper interest rates as we go on, cheaper loans as we go on. So that is something that we will definitely keep an eye on for you here at Magicbricks Now, and let you know as and when the interest rates move. Facebook query next. Rajiv says that he's 54 years of age. Now he wants to take either a loan against property or a reverse mortgage loan. Which one should he opt for? He's looking at a loan of 50 lakh rupees. Now, he works as a senior VP with a big company. He earns 2.5 lakh per month as salary take home, and his CTC is 48 lakh rupees. He will retire in 2022. What would you suggest, Kartik?
A couple of options for you. Reverse mortgage is definitely out, because reverse mortgage, the whole philosophy of reverse mortgage is to try and provide you an income support or an income replacement, whichever terminology you are comfortable with. Now, having said that, you want 50 lakhs. So the 50 lakhs against your property can only happen in one of the two ways, which is you take a loan against the property, and straight away take a 50 lakh loan. Of course, you will be absolutely eligible to it. Choose the tenure based on your retirement period, or you may choose the tenure which is a slightly longer one if the bank accepts the fact that you are going to have certain pension income as well. So in all those scenarios, you can go on for a slightly longer tenure, but loan against property should be one of your best bets to do this thing. Reverse mortgage, you will probably also get it, but there are certain rules and regulations that you need to observe. Plus, the 50 lakhs may not happen the way you want it. So it will come in smaller tranches, and because that's, like I said, a monthly income support. So your better option is loan against property. The rate is going to be slightly higher, but then if you need your 50 lakhs, you'll have to do a loan against property.
Right, so essentially to make it simpler, I mean, Kartik did a very good job of making it simple. Let me make it simpler for you. It's a reverse of your home loan. So when you take a home loan, you pay an EMI to pay off that loan. When you take a reverse mortgage, it's almost like the bank has taken a loan from you in the form of the property, but you're not going to get it as a lump sum. What you are going to get is a monthly payment from the bank. So if you're looking for 50 lakh rupees, when you retire, you're not going to get it by reverse mortgaging your property. You will not get a lump sum payout. You will only get monthly payment. So if you're looking for a monthly income, probably yes. But having said that, there are other options also available in the market for that monthly income. So you really need to figure out what you want to do. But if you want a lump sum, like Kartik said, go with the loan against property. Email query next. Balaji says that he regularly utilized his credit card. He also ensured that all the settlements were paid each month before they became EMIs. However, he was once charged an EMI despite making a full payment. He took it up with all the concerned parties, but to no avail. He stopped using that card, but continued receiving calls from the bank for months later. He explained the issue to the executive, but it is yet to be resolved. Now he's been given an itemized bill for the purchases made earlier. Due to this, obviously, his CIBIL score is affected. What should he do? Now, this is a big issue, Kartik, and I'm glad he brought it up as a question. What do you do if your CIBIL score is impacted for no fault of yours?
Okay, so let's take this with a pinch of salt that Balaji, thinks that there is no fault of his. But in experience, what I have seen a lot of people, a lot of times, I mean, I'm not saying Balaji is wrong. Don't get me wrong here, but what I'm saying is a lot of times people actually don't understand how the charging mechanism is working. So sometimes you may feel you are right, but you actually technically might be wrong. Now let's for a minute assume here, I mean, in all possibility that there is something that did not go wrong with Balaji. Balaji is absolutely right. Now let's sort of go on that scenario. Now, in that sort of a situation, what would you do? You would start writing to the bank. You don't keep talking on the phone. You pick up the email of the ombudsman. There is a certain grievance redressal procedure which you must follow first. So you write to the first level if you are not happy, and there is a turnaround time. It's called a TAT for every single grievance that you will file with every level of a grievance resolution officer. So you send an email for the first round. If you're not, they'll reply you within some time. You're not happy, move up. You're still not happy, move up. There's yet another level. Right, more or less by the time it reaches the senior most ombudsman, things should get resolved. Maybe somebody will even speak to you. Somebody who understands things better will speak to you instead of you talking to the call center and these loan collection retrieval officers all the time. Maybe they don't understand. Somebody higher up will understand you better. So mostly a resolution should happen. If the resolution does happen, then automatically your CIBIL, you have almost pretty much sorted it out yourself, and they will reverse all those things. Now, if nothing works out, before you go to the consumer court, which is a very long process, I'm going to give you a slightly different kind of advice. There are lots of private agencies who are today in the market, and a lot of them do a pretty good job, you see. So you can approach one of them. Now, what they will do is, on your behalf, they will pursue the bank, and because they are doing it on an everyday basis, they know all the people in various banks and various credit departments. They will, of course, make a definite detailed study of whatever is your situation, whatever your problem was. They will scrutinize all your statements to make sure if you are right, they will represent you, and they will make sure that your CIBIL is restored to whatever level it was earlier. This is possible, it can be reversed. So don't worry about it, but in the interim, you will have some pain. But if you keep talking on the phone, nothing will happen, because talking on the phone does not do anything. You need to get documentation started. So that's a must do. If you don't want to go through this private agency route, of course, you'll have to pay a little fee also for that. But if you don't want to go through this route, then of course consumer court is your next route if your ombudsman is not able to solve your problem. But just make sure, even if there's a 1% element that you are wrong, you do your calculations seriously well before you tell the world that, you are wrong and I'm right. So
no, but even then, Kartik, the problem essentially with the CIBIL score is this. Sometime when I've just, at some point in time when I just started earning, I'd got a couple of credit cards, I'd got a mobile phone and all of that. Probably there was this one little payment that I missed.
Yes.
Which I might have missed, which I might have missed by a week or so, and which I've repaid after a point in time.
That's right.
But that black mark will continue on my CIBIL score ad nauseum, from what I gather,
yes.
and that will that will actually turn around to bite me in the back when I go to take a home loan, maybe 10 years later, 15 years later. So that is penalizing somebody for, far too long.
Yes, absolutely. You're 100% right, and you unfortunately can't do anything about it, because it's like talking to CIBIL is like, talking to, banging against a wall. There is nobody from CIBIL who will get back to you. If CIBIL says, I don't own the database is owned by all the banks put together. You talk to the bank, they'll say CIBIL is responsible. So, they actually make quite a fool out of you. But this is the fact, this is the reality.
So the private agencies are actually effective? How
yes, you
good
see,
are
what
they?
happens is, now that's where I want to make a point here. If you are right, and even if your record is showing that you are 20 days or 30 days, out of credit, or you were late, like you mentioned in your specific case, that can be reversed, right? But obviously it requires a huge amount of follow-up and somebody to prove your point to the banker by phone saying, hey, look, this is the fact, So you all have done a mistake. What I understand is CIBIL per se is not controlling any of this. So it is the bank who's automatically, the bank's computer says that this payment is delayed. Really bad, it is completely unforgiving, and it's completely one-sided, where the consumer has no speech, has no representation mechanism or any sort of a redressal mechanism to even prove that, a mishap happened and all of that.
Here's what we've learned. If your CIBIL score, if you have a poor CIBIL score, first figure out why you have the poor CIBIL score. Yes. And if you're completely in the right, then start writing letters to the bank, start proving to them that you are in the right. Go level after level. Probably you'll end up talking to someone senior enough who can solve your problem. If not, do remember that the Reserve Bank of India also has an ombudsman who is like the highest authority for redressal per se. So you can actually go to the RBI ombudsman as well. Now that is one thing you can do. The other thing, of course, like Kartik said, there are private agencies in the market who will help fix your CIBIL score for you. They will follow up with CIBIL and the banks, so you don't have to do the running around. So there are two options that you can follow.
Right.
Next, let's take a Facebook query from Pratik, who wants to know which banks provide home loans for purchasing residential plots. Now, he wants to avail a home loan which would have a provision to buy a residential plot and construct a house on it thereafter. Can he get a loan to buy land?
Very often, mostly people don't give you loans to buy a land, right? But however, there are certain, NBFCs who have been active in this space also. So you'll have to do a little bit of shopping. HDFC's website says that they do give loans to buy a land. What you will definitely get is a loan to construct your house. So once you purchase your land, and then if you want to construct a home on that, everyone's more than happy to give you a construction loan, which is basically a home loan. And there is a certain period of time within which you construct it, and then you can start, availing the tax benefits as well. So all that is very well established. But not many people are giving loans to buy a land because it's a little difficult to establish history, title, whatever might be the technical issues that financiers would be having. But having said that, do a little bit of shopping. There are people who are willing to fund
What if I were to buy plotted developments which are which are quite popular in, say, the Bangalore and the Hyderabad markets?
Absolutely, which is exactly my point, that there are people who are interested in financing this, and these days if there is a developer who's developing something of this order, then mostly the developer, to sell his plots, he automatically, before even you apply, he himself goes to various banks and financial institutions and tells them to give them their endorsement as a pre-approved project and things like that. So which means when a consumer is actually going, he knows that there are these 3-4 options available, and he can straight away go and talk to any one of them, and in all probability your loan will get sanctioned.
Right. Twitter query next. Manish says that he's 50 years old, can pay 1 lakh rupees in installments every month. How much loan can he get from a bank? Is that how your loan eligibility is determined?
Well, I mean, so he's saying here that he can pay 1 lakh. So whether or not the bank will allow him to pay it or not is a secondary question. But 1 lakh EMI will bring you a loan of somewhere in the range of 90 lakhs to about a crore, depending on the rate of interest. So we're assuming 9.5% range. So that's the loan you can get. The question that you have to ask yourself is, do you have an income level of at least about 175 to 2? Because the bank or the financier is going to look at your income to installment ratio. So the most comfortable level from a financial point of view is about 30-35%, which is your internal, which is my advice to you, that don't exceed beyond a third of your income. But financiers will happily go up to maybe even 50% or even 60% in certain cases, depending on the size of your income. And they will let you pay an installment which is, like I said, 50 or 60% also of your income. So
but Kartik, what I'm more concerned about is his age. Manish says he's 50 years old.
Yes.
So he's 50, which means give or take another 15 years of active employment, after
That's
which
right.
he'll probably move into a consultancy role or kind of something
Probably
like that.
Probably so.
So if that is the case, will a bank give him a loan where he has to pay an EMI of over 1 lakh rupees per month?
Well, like I said, it all depends upon his overall income earning potential and what income he's actually earning. So having said that, the bank will happily fund him. 10 years is a definite yes, because a lot of people may not fund him beyond 60 and say that, okay, the tenure is only 10 years. If the tenure is 10 years, naturally the loan will be smaller because the installment automatically is higher. And in that case, you're looking at 75 to 80 lakhs. So that if it's a 10-year tenure. But these days, people are very happy to give you loans up to 62, 63, 65, because either you have pension coming in, which you can pretty much prove, or there are people who also look at the property which you're going to buy. Maybe it's an investment property which you propose to give it on rent. So they will also consider some amount of rental income. They would give some credence to that as well. And then they'll be happy to fund you for a tenure which is longer than 10 years in your specific case, and where it could go to maybe 12 years or even 15 years.
So I guess it's essentially also when you are taking a loan at age 50 and you have a substantial income or right. a substantial EMI repayment capacity, like in Manish's case, it's also what you are able to bring to the table, how well you can negotiate with the banker. So I think that is something that Manish, you should definitely pursue. In fact, you are in a situation where you can actually go around shopping for a loan. So do that, get all the options, and if you're still confused, come back to us, we'll help you out. Website query next. Sangraj says that he bought a property recently and the builder has promised delivery soon. Now he booked it on pre-EMI. The property is not yet ready, but he needs to start paying EMIs from the next month. Can he postpone the first EMI installment?
I mean, Sangraj, it's out of the question. I mean, there is no way any bank is going to allow you to do that. As soon as you take the loan, from the day you take the loan, your meter is on, and they will want interest payment to happen. So very often pre-EMI is a mechanism by which you are not burdened with principal repayment, because the logic is that you've still not got possession of your property. So we don't want to charge you an EMI, but you have to still pay the interest. However, a lot of people in any case choose to pay the entire EMI. So if you can afford it, if your income allows you for it, if you can spare that EMI amount, which will include a component of principal, my suggestion is go ahead and do it. If you have a little surplus that you want to add into your overall EMI component, and if you want to make like every quarterly a little bit extra payment also, by all means do it, because what's happening is in the process your principal is reducing constantly. So my suggestion is start your EMI straight away, if not anything more, but definitely your entire EMI. Don't just pay pre-EMI. ask the bank that you want to pay pre-EMI, instead of pre-EMI, you want to pay the normal EMI, which would have some amount of principal component. See, in the early years, the principal is very tiny. It might be as low as maybe 2% or 5% or 10%, depending on the size of your loan and the interest rate. So you're paying very, very small amounts of principal, but at least something you're paying. Otherwise, you'll find out that by the time you get delivery of your property, the only thing that you've only paid is interest. You paid lakhs of rupees just as interest and your principal hasn't even budged. And if the interest rate goes up, then the number of payment period or the number of months that you'll have to service the EMI will even increase further to maybe 15 or 18 or 20 years or 25 years.
Right. And Sangraj, I'm just reading between the lines over here, from your question, you say, builder has promised delivery soon, I bought it recently, property not yet ready. So if it is a property delay that's worrying you, then be very clear that by holding back on the EMI payment, you're not really going to, it's not really going to affect the developer. What will get affected definitely is your CIBIL score and your relationship with the bank, because Absolutely. The EMI is going to the bank, it's not really affecting the builder in any way. Okay, moving on, Surender Bisht has written in on our Facebook page. He says that he lives in a rented house near his office. He plans to buy a house on a home loan in the same city. Yeah. Can he claim both tax deduction on the home loan and the HRA?
Yes, this is quite a rational thing. With the cities expanding, and you may actually choose to live closer to your place of work and actually pay rent for that. I mean, that is the most logical way of looking at it.
Especially if you're living in Mumbai, that's it.
Yes, absolutely. So you might
be having... That's the most logical thing.
Yeah, you may actually have your house which is pretty far away. When you change a job, your office is now at another part of the city, and you may want to actually put your house on rent and actually pay rent somewhere else. So you can get both the benefits. But now that is logic. Technically speaking, now when you have more than one property, you have the choice of making one property as what is known as your self-occupied property and one as your deemed let-out property, even if it's not let out. So in that case, you can choose which one is going to be your SOP and which one is going to be your leased out property. See the tax advantage, where are you in an advantageous situation, and then you can actually choose to make one of them your SOP and one of your deemed let out if you're going to buy another place. But HRA benefit, remember, will be allowed when you're paying rent, okay? Otherwise, you will not be. So I'm just answering even one more step than what you asked. So if you have two properties, you'll get both the benefits. If you're going to have two properties, but one is going to be rental, which you don't own, then your HRA benefit will kick in. Otherwise, your HRA benefit will not kick in. Remember that.
So essentially, if you're paying rent, you can claim HRA. End of story. And you can also claim deduction on your home loan because
you
it
have
is
a property, yes.
Within the same city. But the only thing is it has to be at some distance from each other. You cannot have a property in the same building and claim HRA.
Well, if the income tax department finds out that they may disallow and they may ask you for a lot of tax. But his query is very straightforward. He's going to stay in a rented house near his office. Right. So get your HRA, claim your HRA, and for your own house, take your tax benefits. No problem.
Abhinav has written in an email. Now, he and his wife bought a home worth 53 lakh rupees. They took a home loan of 27 lakh rupees for the same. The home is registered in both their names. They are both working. What are the tax benefits that they can both avail on the loan? I believe it stays the same.
Yes, absolutely the same. So both of you can get exemption under Section 80C for principal repayment up to 1,50,000. Of course, if your provident fund and your insurance premium and the other things that you do, if that is already occupying the 1,50,000, then you will not get the additional benefit. But if there is nothing in that space, then up to 1,50,000 is obviously possible. Both of you will also get benefit in terms of your interest repayments up to 2 lakhs each. So essentially, if you add up everything between the two of you, 2 lakhs of interest cost, which is 4 lakhs, and 1.5 lakhs each of principal repayment in totality is about 7 lakhs as a family. So 7 lakhs is a huge amount of saving that you can have. But with a 27 lakh loan, obviously you are not going to be, completely exhausting that limit. I mean, if I take a ballpark 10% interest, that's 2.7 lakhs divided between each one of you. Each one of you is obviously paying something in the range of 1,25,000, 1,30,000. So your interest exemption is only going to be up to that level, not the whole 2 lakhs, because you're not paying that much.
Is this, now I'm assuming here that Abhinav and his wife both have a 50-50% share in that particular home and in the home loan. But is it also in any way related to what is the share or how much are you actually repaying on that home loan?
That, Kavita, is a very, very interesting question. Yes, if you do not specify anything in your agreement, it is assumed that Each one of you have equitable share, which is 50% each. However, if you, very few agreements do this, but if you actually decide and say that, hey, I'm going to have 60% and you're going to have 40% because that's exactly how we are paying, then well, your exemptions obviously will also have to be in the same sort of split. So you need to be a little cautious about that. So I'm glad you brought that point out. That's wonderful.
I have one more question.
Yes.
So typically what happens is the home loan EMI goes from one bank account.
Yes.
And that is what is used, that is what the tax department also monitors, right? When they are looking at tax exemptions. But here there are two people paying off the home loan.
That's right.
So what happens? So then they have to, kind of build a paper trail where both the money from both their accounts are going into that one particular account and then it's going out?
Yes, I mean, you have all options in front of you. So one of the best things to do is, so husband, wife, right? So have one account which has husband first holder, wife second holder, the other one which is having wife first holder and husband second holder.
Okay.
So you've set up two accounts like this. And I'm sure you already have it because if both of you are working, your salaries are coming obviously in your individual accounts. These days, you don't take all the salary into one account. So logically, I'm assuming you have two accounts. Get the second holder's name done if it's not already done. All right. Then you can tell the bank to debit both your accounts in whatever proportion you want or equal proportions. That's one way of doing it. Or you can actually have it going out from one account and it's you don't even have to pay your husband or wife. It's like a deem because husband-wife transactions are free of any gift tax. So for a practical scenario, say if the husband's paying all the EMIs from his account and the wife is paying for groceries and everything else from her account, even that's perfectly okay. So even if the husband has paid everything, the wife will still get the tax benefit because the home is owned jointly. It is like saying that the husband actually paid the full amount on behalf of his wife also, which means he gave the money to his wife as a gift and then instead of the wife making a separate payment, he just paid on her behalf. So that's perfectly acceptable and there's no problem. So you don't need to worry whichever way combinations you use.
That's Home Loan 101 for all those couples who jointly own property out there. Moving on, we have a question that I'm sure, this is one of Kartik's favorite questions. Rohit Ladda says he has an existing home loan. He wants to know if he should use his current savings to repay it and clear it out, or if he should invest it in some other medium with higher returns. He also wants suggestions of other such mediums.
Kavita, you already know the answer for this.
So you'd be very quick about it, Rohit. Sorry, I mean Kartik.
No problem. So there's always this situation that when you have your savings, your property is growing at already a 14-15% rate. Go ahead, invest your money into mutual funds, equity mutual funds. They'll again grow at about 14-15%. Use the profits to make prepayment. Don't be in a rush to finish off your capital and pay off your loan because it's a one-way street. You get nothing. But this way, by investing, you enjoy your capital and use the profit to pay off the loans. And that's a great way to enjoy your capital and build wealth also for future years.
Basic investment rules: don't put all your eggs in one basket. And if you have the opportunity to build two assets at the same time, go for it. That's it on today's episode of Property Hotline. Kartik Jhaveri, thank you very much for coming in. If you have any questions related to real estate, do get in touch with us. IDs flashing on your screens over there. We'll get the country's top experts to answer each and every one of them. That's a promise. Thank you very much. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.